in the air in Washington, D.C. No impeachment. Mueller is a big nothing burger. And Trump and Congress embrace and agree to extend the debt ceiling past the 2020 elections with no debate. But there will be debate on today's American Confidant.
Loading the American Confidant intro.
We have $15 billion in gold in our treasury. We don't own an ounce.
And one of the problems is we don't have the gold. Other places have the gold.
It's called the American dream because you have to be asleep to believe it.
The American Confidant.
Make sure you subscribe to our YouTube channel, The American Confidant, to stay up to date with every episode. And be sure to like, comment, and share. We want to hear from you, the people. Hello and welcome to the American Confidant. I'm Jim LaFave, and I'm joined in the studio, as always, with Cash.
How you doing, Jim?
Simply marvelous. How are you, buddy?
I'm doing excellent.
Super duper. Good to hear it. We will be joined with Rick on the trading floor over at GSI Exchange. We're covering a variety of topics today, but first, let's get a look at the news. A lot of stuff going on. What you got, Geneva?
Thank you, Jim. Equifax just reached a $700 million settlement for those whose data was compromised when their credit reporting system was hacked in 2017. You can actually now go online to the Federal Trade Commission website to see if your information was impacted and to be eligible for a cash payout. Boris Johnson is officially Britain's new prime minister. He took office with a pledge to defy the doubters by taking the country out of the European Union by the end of October. Johnson's first act was to oversee a bloodbath of cabinet ministers. He fired supporters of his rival and installed loyalists who backed his campaign to succeed Theresa May, including his younger brother Joe. Congress just got one step closer towards staving off a fiscal crisis as the House passed a budget deal that would increase government spending by $320 billion for the next 2 years and allow the government to continue borrowing. The House passed the deal with support from mostly Democrats on Thursday, just before representatives left town for the summer recess. Despite Trump's support for the bill, 123 Republicans voted against it for a final count of 284 to 189. It would also lift the nation's debt limit for 2 years, setting up the next deadline in 2021. Thank you, guys, and back to you in the studio.
The good old budget deal. Okay, so, love American style, Cash.
You know, this is unbelievable, Jim. You know, I've always said these are two wings of the same bird, Jim.
The same turkey. It's
That's
a turkey
right.
bird, right?
Turkey bird. The Washington turkey bird.
Yeah, exactly. Okay, so Trump and Pelosi, they get together, and Chuck Schumer, and also Mitch McConnell. So you got the four heads of government, right? So anyway, they agree on extending the debt limit past the 2020 debate. Okay, so no debate. The debt ceiling keeps going up, so that means that the election can run
without opposition.
Right. No mention of debt.
No mention of debt.
Shh. No, we can't say that.
Can't peek under the hood.
What do we call debt? Can we call it something else? Profit. Why don't we just call it profit? Yeah, we'll just print the cash. Okay, so what's that mean for gold and silver? We'll get into that. We got a clip of Donald Trump announcing the budget deal. Let's go to that.
Secretary Mnuchin is talking about we're having very good talks with the Speaker of the House, with Nancy Pelosi. We're having very good talks with Chuck Schumer.
The budget deal, what does it cover?
Jim, you know, we've got this debt, and the debt's facing us clear in the face. We know somebody's got to pay for it sooner or later, and nobody's going to talk about it until after the election. But it's going to continue to mount. It's not going away.
If I see, I see a government, supposedly, if they can agree on one thing, like last week on the Secure Act that we covered on the show.
Yes.
They actually got together and they all agreed to pass that, right?
They can't agree when they want to.
So they were Love American style. Now they're all in the love boat on going and sticking the debt limit up through the sky. But we're not going to talk about it. We can't talk about debt. We agree not to talk about debt. We can't talk about debt in this general election. We're going to scare the people because we're stealing their money, right? We don't want them to know that.
That's right. Well, you know, think about it, Jim. If we continue to talk about debt, foreign investors who carry a large portion of our debt through treasuries are going to start looking differently at us, won't they?
You know, that's if they're going to go ahead and raise the debt ceiling, they have to sell the treasury market, right?
Yes.
Somebody's got to buy the debt, right? Right. But so this interest rate, this whole interest rate dance, you know?
Yeah.
They can't really sell treasuries if they're admitting we're going to cheapen the dollar, right?
That's right.
Okay.
That's right. And think about this, Jim. For every point that the deficit goes up or the interest rate goes up, we're adding $1 trillion in debt service. So what we're really not talking about over the next year and a half until after the 2020 elections is we're not talking about what this is really costing us. What's the debt service? How much more is it increasing by just as a result of the interest on that debt? Jim, you know, you think about debt service, right? I mean, you're paying somebody a service to carry the debt that you've incurred. And this service that we're talking about, this $1 trillion per point, at a time where we're now talking about cutting the interest rate. But I think they came to an agreement because when they looked at the real GDP numbers and they revised it for last year, we're not at 3%.
Right.
And we didn't even hit 3%
right?
this year.
That's right. 2.1, right?
That's right. So now, well, that's 2.1 now.
Okay, having said that, Cash, remember John Williams, Shadow Stats, telling us that according to the real inflation.
Yes.
So this is just, they're saying, even in their own numbers, that they overshot it. And we're a lot lower. But in reality, we're way negative, aren't we?
Well, so, Jim, I think the stage is being set. If you really parse through all this, the stage is being set for a big surprise, because one of the things that we're going to have to do, and we've talked about this before, I believe several shows ago, we talked about the Committee for Responsible Federal Bipartisan Committee. Jim, think about this. What they were talking about is defaulting on the debt, a soft default, and revaluing the debt using gold in the Treasury. So now we also talked about there's not enough gold in the Treasury, and we know President Trump has come out and he said that the gold standard's a beautiful thing. He'd love to see it, but there's not enough gold out there. So when we think about that, Jim, think about this for just a moment. We don't have enough gold in the Treasury. Maybe we will, maybe we won't increase interest rates, but we do know that nobody's going to talk about the debt service or the debt, i.e. the service, the cost of carrying that debt until after the election. Well, that leaves the door wide open for a big surprise because something's going to have to give here.
This is what the American people need to understand, is that there used to be a voice out there saying, watch out for the debt.
Yes.
That was always there. It's not anymore.
No.
We've got Donald Trump, right, who was never put in as a fiscal conservative. That's not why he was elected. He was a middle finger voted in candidate here in this country. And all of a sudden now, he's putting his foot on the gas. He's going to spend more money, and I'm sure those Democrats cut a deal. They got all their social programs to agree to this, and he's going to get his wall. That's great. And we're going to get the bill.
Well, Jim, this is the same Democrats that were just last week trying to impeach him or look for some inroad to being able to impeach him, right? I mean, here we got this party that's putting Mueller on trial again or calling him before Congress to testify, looking for some moment in which they can have something that they can hang their hat on and say, yes, we got you, President Trump.
Do you know what was so fascinating? And on that's all of a sudden now they're getting along.
Yes.
Right, because
so
they realize,
what is the deal?
Because
what was the deal?
They've got no impeachment left. It's no left. So now they got to come up with something. And what do? They will fold right into government, and they operate as one. And, Cash, I've always said this, the American people are better off when our government is fighting with each other and calling each other names, because then they don't get anything done. And maybe that's the best for the American people.
Well, they got something done just now, and that they did manage to raise the debt ceiling, so put us deeper in debt. They both agreed to that.
They agreed to the Secure Act last week,
Yes.
so they're going to go ahead and tax the pass-through of retirement.
So what's behind the scenes here? What's going on? What deal was cut here? As I said at the beginning of the show, Jim, this, in my opinion, is two wings of the same bird, and we're flying in a very dark direction.
Okay, we're going to go into Rick at the trading floor over at GSI Exchange and get a little slant on the gold and silver market. Rick, is it sleepy out there? What's going on?
Well, Jim, right now, a lot of things are happening today. We saw that the Dow is pulling back as earnings came out. So expect a market correction next week as we see the Dow break below 27,000. Now, what's really interesting also is that Deutsche Bank is still bleeding money. They are not looking good, Jim. It looks like the European Central Bank in Germany will have to step in and do something. We have right now Gold trading at $14.1750. It's up actually $2.60. A little bit of profit taking this week as it went up to $14.25, but still looking positive. Silver's on the rise, came in strong and heavy, broke $16, went to $16.50, pulled back to $16.36. I'm expecting gold and silver to really do spectacular. Gold and silver that are up on the front run right now. You know, it's a race. It's a race to the gold rush, Jim. Come Monday, we're also seeing and expecting, you know, a convoy going to China, and we don't know if we're going to have a deal. Now, this is worrying the White House. Kudlow came out today very concerned, saying that the White House is watching currency manipulation, but that we, at this point, as a country, have not yet decided whether to devalue the dollar. And for those people that are on the fence right now, get off the fence. There's a major market correction coming. Interest rates are going down. Central banks right now have no choice but to play a weak hand. That will mean currency devaluation, and that will mean gold and silver will run.
Rick, thanks for joining us, man. You say hi to the guys out there, and we'll get back at you.
All right, thank you.
You betcha. Cash.
Jim, you know, he brings up an interesting point. He said that, you know, there's a mixed message coming out of the White House. We've got Kudlow saying that he's not in favor of a weaker dollar, and we clearly have heard President Trump on numerous occasions, and most recently, even just this week on the Wall Street Journal, there's an article that talks about President Trump wanting to weaken the dollar. So where are we going? I mean, are we sending this message for our foreign allies, or are we sending it for China?
Publicly, I have to take some stance. I have to have my little guys like Kudlow. We got a Kudlow clip like this guy. Here he goes. Go to Larry.
You know, we've looked at it. The Treasury has put out reports. They have a watch list. I don't want to expand on that. That's, you know, they're working there. But we keep a pretty sharp eye on that.
Well, that makes me sleep well, doesn't it?
Yeah, yeah. He said a lot of nothing, didn't he? It was a big nothing burger.
But it's a beautiful thing. He's a beautiful guy.
Keeping a big eye on that, right?
That's correct. Yeah,
okay.
Big watchful eye on our pockets.
But here's the deal. So you're right. We've got a public statement, and we've got the behind-the-scenes machinations that are taking place. And what are they, Jim? You know, I think about it. If the Chinese got wind that we're really trying to devalue the dollar, that could affect their treasuries. We've got the Europeans that are trying to shore up their own economy because they know that, you know, they've got Boris Johnson in there, and he said he's going to tear away from the EU whether he has a deal in place or not.
I just wonder, you know, when the Fed was pushing out all this money at 0%,
yes,
there must have been banks sitting on the cash.
Yeah.
Okay, and now they just got, what, 2.5 points on all that money?
Yeah, so it's a big profit, isn't it, Jim? All this money that was just sitting there.
Sitting there.
Biding its time and not making money, but all of a sudden now we've got a boost.
Who is it that said interest is money? Those that understand it will profit from it. Those that don't will pay for it.
Rothschilds,
That's
wasn't it?
correct. Lord Rothschild.
You know, Jim, this is shaping up to be a very interesting time right now. We know that, you know, the markets, in fact, let's talk about the markets for a moment. You know, Jaslow Yao, who is a global market strategist at JP Morgan Asset Management, said that U.S. stocks have had a good run this year, but that could end real soon, as early as this quarter. She said the potential sell-off would be driven by a downward revision in earnings forecast for the next year. Nobody's talking about the performance in gold, and we're up a little better than 15.6% for the year.
Look at that.
At the same time. So what does that tell us, Jim? Central banks are buying gold to cover their assets, right? Because even though they're making money in stocks, back in April, gold was deemed by the Bank of International Settlements, the bank of all banks, ruled gold as a Tier 1 asset. And what did we just see? We just saw JP Morgan Chase didn't pass its stress test. Why? Because they didn't have enough Tier 1 asset. Because here's the thing.
That's not at all, right?
When in the 1920s, when the economy was collapsing, we had a shortage of automobiles were in slump.
Manufacturing way off.
Farming took it hard.
Cash, look at farming now. We've got a devastating wave coming up with regards to food shortages, with pricing on physical commodities, and that's why we're seeing gold and silver move up.
I wouldn't be surprised if we have another dust bowl, Jim, to be honest with you. You know, there's a story, Jim, that Morgan Stanley sent out news to their high net worth investors that it's time to sell stocks. And one of the reasons that they said it, although, as I said, the stock market has done extremely well, but they see this as a signal of escalating risk at a time to take profits in stocks, and they're encouraging their investors to take their profits and get out. They said that there's less than a 1% upside to the market remaining and a 7.6% downside in this next quarter.
How convenient for J.P. Morgan, sitting on 750 million physical ounces of silver.
Not to mention all the cocaine that they're shipping.
That's right. They moved out of stocks last week.
Yeah, quick. Quiet as it's kept. They certainly didn't want to see that on the front page, but that couldn't be helped.
What else you got over there, Kev?
Well, set yourself up for protection. This is the time. Jim, real quick, before we wrap up the show, I just want to say this real quickly. People soon forget that from 2003 until 2008, gold went from $250 an ounce to $800 an ounce. That's where we are today. Forget about the $1,800 that it reached in 2011. That was the all-time high. But there was a small bull run, and Jim, quiet as it's kept, that bull run is unfolding right now. It's time to buy gold. Use your profits on gold. You'll be well rewarded. Use it to buy silver when it finally wakes up and starts to accelerate. This is the moment, Jim.
You know, Cash, and you and I, remember before the show, you and I were sitting, and I showed you that MoMA film, 1911 New York.
Oh, man, that was incredible.
Seeing the dignity of these people 2 years before the Federal Reserve was created. And the way they walked, they were selling newspapers.
Yes, people looked dignified.
Didn't they?
New York City. If you got a moment, just go to YouTube and pull up MoMA, New York City, 1911.
I really recommend it because
awesome.
It looked like another planet. And people definitely, there was an acceptance of their own lives and a joy in walking them. You saw it how they walked.
Yeah, 1911. People had suits, they had hats, the women were dressed in dresses. Even the kids were clean. They looked great. This is before the Fed.
Before the Fed. I want to thank everyone for joining the show. Cash, Rick, and the trading floor, thanks for the update. I'm sure we're going to see higher prices. Geneva, I want to thank you for a good news broadcast. Cash, it's always great to have you.
Good to be on board, Jim.
You betcha. And again, thank you, our audience. Thank you very much. And we'll be back on The American Confidant.
Well, they're happy in Washington, D.C., and they're all hugging it out. Gonna raise the debt limit, baby.
GSI Exchange, a leading precious metals dealer helping to protect your retirement accounts and delivering precious metals straight to your door. Contact GSI Exchange at 800-474-9159 or visit them on the web at gsiexchange.com.